Now, I warned you on Friday that we were either going to try to top immediately or we're going to try to top with the Fed this week, one or the other. And I told you, as we started to gap higher on Monday, we're likely going to top surrounding the Fed this week. I was looking for a top. We're slamming into major resistance levels. I told you on Tuesday we had a pretty good shot of a top. We still may go higher with the Fed. We ended up going higher on the Fed day, and then I told you yesterday on the Fed day that we've likely topped on October 29th, 2025, the day of the Fed day. We're hitting major resistance. Told you Powell would end up tanking the markets. Oh, no, today is about Meta and Microsoft. Part of it, I told you it could be earnings as well, but again, Powell's canceling the December cut. You're going to have the herd is going to throw a little fit, and that's what's going on. We saw that initially when Powell mentioned that with yesterday's FOMC meeting. We're still going to get the cut. Actually, the jumbo cuts in late December or on into January, which is what I think is more likely. You've got a very good chance we've topped. I think we've topped. I told you that yesterday. On you today, I think that is likely the case. The major resistance levels I'm looking at in the monthly and the weekly time frame. I told you to be looking for a top this week and be looking for a reversal before the week ends. I think we'll have that by Friday, and it looks like we're on our way there now. The Dow was down almost 0.25%, down 110 points, rounding up. The S&P was down almost 1%, 0.99%, down 68 points. It's trying to rebound with futures and after hours based on Apple earnings and I believe Amazon, but we're probably not going to be able to make new highs. You're probably going to get a rally, and then we're going to see more selling. The NASDAQ was down 1.58%. The Russell was down 0.76%. The VIX was flat, slightly lower, down 0.06%. We have earnings and after hours helping futures get a little bit of a recovery, but after a sharp decline of for the S&P, over 1.5% for the NASDAQ, it'll probably just be a bounce fall by more selling. Apple and Amazon apparently had good earnings here. Remember, Microsoft lost almost 3% today. Meta lost 11.33% today. So remember that. We have Apple in after hours. Apple is up 4.27%. Whoops, wrong color. 4.27% there. And then Amazon we have in after hours. That is up 11.82% right now at the moment here, up almost 12% in after hours. And this is helping the market with futures in after hours. I'll be watching the hourly chart on the S&P 500 to see if we try to get a recovery. We gapped lower. A potential head and shoulders developing in the 60-minute time frame I'll show you. But again, we're starting to become oversold here. So again, can we get a rebound back up? And if so, futures rebound on Apple and Amazon earnings. We can rebound back up by Friday's close. Can we get an immediate counter-trend rally if our high holds from the Fed day, which so far in the intraday time frame, this is the 60-minute chart, was a gap and trap. S&P 60-minute chart here. Quickly, while I have it up, S&P daily here. Again, we're getting the diversions developing just like on the RSI. Multiple point diversions here on the Awesome Oscillator. The stochastic rolled over today. We're watching to see if we get green or red bars by Friday or into early next week. If we're going to get a reversal of conditions, you got to take out the 10 and 20 period moving average, the lower boundary of the cloud, right where the 20 period is. If we see that happen, momentum will officially shift, turning bearish. You've got that possible head and shoulders pattern over here with our peak on October 9th. And now you've got a potential head, but you got to flip the cloud. You got to flip the trending signals all back to bearish. And here, the momentum signals, the bars have to turn back to red. You got to take out the 10 period moving average. We're just above it right now. So I'll be watching that. You've got all these divergences going on. And then now momentum is shifting with the stochastic. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. I thank you for your consideration for that. I told you the stochastic turned bullish on the VIX yesterday. I told you yesterday I think we have a top on the market. I told you earlier that I thought we would get a top this week. I think it happened on Wednesday. I told you it might have been on Tuesday, but we still ended up going a little higher. I told you on Wednesday I think we have it with the Fed. Breakout here with the VIX. We've got a hollow red candlestick today, still closing above the 50-period moving average. We had dropped back below it. We closed above it yesterday. We dropped back below it today, and then we closed. We ended up closing above it, getting a hollow red bullish reversal candlestick. Breakout of the bullish falling wedge. Our MACD is at the center line. There, again, it's likely going to recycle back up, very similar to what we had over here, and you're going to see volatility surge. You're going to see the VIX get back above the 200-period moving average. Just before, again, we saw the volatility on the S&P in the lower window. Bollinger Bands are tight, expanded a little bit, and still relatively tight, very similar to the scenarios we had here and over here. VIX can hold above the 50-period. The S&P will end up getting a bigger sell-off. Yesterday, the stock market had likely peaked. I believe that it has peaked as we're slamming into major resistance levels. I thought we'd see a post-Fed sell-off today. That's happened, but the possibility of selling off with the earnings as well, that is the catalyst as well. Again, the divergence there on Tuesday gapped higher with the Fed and then sold off. And again, it was a gap and trap with the Fed here in the 5-minute time frame. It formed a multiple point divergence here, and the recent price action went back over here, and that gave us a gap and trap, slamming into major resistance. This is why I told you I was using resistance as a place for shorting opportunity towards the end of the session there on Tuesday and then more on Wednesday. Again, playing the trend line of resistance on the S&P in the weekly time frame. About it all week. So we gapped lower today, rebounded back up, did not fill the gap, and then we sold off towards the end of the session. Again, we're rebounding in after hours with Amazon and Apple earnings. You're probably going to come back and try to fill the gap from today. And if we go back and we fill the gap and everybody go, oh, it's over, and you'll probably come back up here towards the 200 and probably overthrow it and try to fill this gap. It's likely going to happen. That takes us back up to right around the 68, 92, or 93 area. We don't have to fill the gap, but we very well could, and we're recovering in after hours with futures. So it's likely you're going to try to fill this gap and, again, test our 200-period moving average. We're becoming very, very oversold. Diversions developing on the MACD. So, again, you're likely going to see this rebound. Sold off with earnings today. We're rebounding with earnings after hours. You'll probably see an attempted rebound. Do we close weak or strong? Do we rebound and then end up selling off by Friday's close, rebound, and then resume the selling next week? You know, I've talked about recession. Person after person tell me, we're not going to have a recession. I had one person say, we don't have recessions anymore. Powell did at Powell at the press conference was asked about the current AI bubble in the stock market. Powell gave an answer of this time is. I think Powell signaled the market top yesterday. He when comparing them, he said, "Oh no, this time is different." Not word for word, but that's what he said. Back then in the .com bubble, back then you had a bubble. This isn't a bubble, but that's how blind the Fed is. I mean, that is incredible to me. This bubble is bigger than that bubble. This bubble is bigger than 1929. And Powell does not see it. That is alarming. He said, oh, that was based on no earnings and just ideas back there with the .com bubble. Pretty alarming that Powell doesn't see it. Doesn't see a recession either. He never does. They never do. The Fed never does. Powell started showing concern. I thought, maybe he's coming around. Maybe he's starting to realize soft landing fairy tale isn't going to happen. And then he's reverting right back to cuts, and we're supporting the labor market, so it should not weaken anymore. It's not going to get worse. That's just pretty naive to believe that. And again, the last time the Fed did this and showed that attitude, we saw the weakness in the labor market, and then in 2008, every single month you had you had jobs being lost. Every single month was a job loss. You had hundreds of thousands of jobs being lost. That's how clueless the Fed is. Watch this gap up here and watch to see if we close strong or weak. Here's a 15-minute chart. Again, you had this rising wedge. We broke down from it. You can see it better on the 60-minute chart. Really, I take it further back. But here you've got this little divergence as we're coming down to the 200-period moving average. So again, you're likely going to bounce. We got these divergences on the intraday charts, giving us a sell-off. Here, if we rally back to the 200 and the 5-minute time frame, here the 50-period in the 15-minute time frame in our cloud of resistance. Again, the gap fill, though, up here, just above those levels. So we very well could overthrow the 50-period and the cloud. We're watching, can we get a lower high counter trend and then resume the selling either on Friday or early next week? This is a 60-minute chart. We have the smaller divergence right here, the breakdown of the rising wedge here. And again, we're coming back to our 50-period moving average. Again, you're going to bounce off the 50-period, all likelihood with those earnings and the bounce we're getting in after hours. We'll see, does it end, and do we end up continuing down here as we move into November? Do we end up continuing back to 65.50, which is a potential neckline for a head and shoulders pattern? I think we have topped. I think that we've topped and turned off major resistance for the NASDAQ and S&P 500. But if we haven't, if I'm wrong about that, you could still form a divergence here. If you bounce here and you try to move to a new high, you can get a larger divergence here. I'm telling you what will happen if I'm wrong. I'm not predicting that. I'm telling you, I think we've topped because we're slamming into major resistance. And I've been showing you those charts all week. Bounce, we get a lower high. Now, I do want to say this. We still may end up with a down day tomorrow, even if we try to bounce initially or if we lose the rally overnight. It happens overnight and we give back the rally for Amazon. Great Scott, did you just hear what I said? If we get back the rally for Amazon and Apple overnight, which we could, we can get a bigger sell-off without getting a gap fill immediately, the gap lower from today. I'm just saying that if we are getting a major top, it makes sense that we fill that gap immediately. If we're topping and we're not going to be coming back to these levels for a very long time, very well could fill that gap. Some gaps take years to fill. Some gaps on some charts have never filled. So again, listen carefully. Are you listening? If the rally can happen by the open tomorrow, we can go back and fill the gap, probably get a counter trend to fill that gap with a lower high. Rally fizzles out overnight and something happens overnight. Watching, do we end up just getting a bigger drop below the 50? And again, I think we're moving down to 65.50, but we may fill that gap first. Wrong about the top being here. You may try to get a larger divergence, but we did have a divergence at extremes that could have been it. Eventually, I think by next week, we're down here at 65.50. Likely starting a 5-leg push lower, and if we do go up and fill the gap, that could be a 1 and 2. You could get a 3, a 4, and a 5, and it could look something like this, going into November here. A couple of things. Again, at the government shutdown, I keep telling you, this is going to go on longer than everybody thinks. I'm telling you, the longest one was 35 days. I expect this is going to go on 5 or 6 weeks, maybe 8. I'm thinking, 5 to 8 weeks or so. It goes on longer than that. I could be wrong, and we could go on even longer. We can go on 10 to 12 weeks. This is the final nail in the coffin for the economy that's going to push us into recession. I think that's why it's being done. 1 year from now, ahead of the midterm elections, the stock market's going to be a whole lot lower. You got to keep the government shut down, create some pain to put the final nail in the coffin for the recession here. We'll still have the recession. The government shutdown will expedite it showing up. I've been predicting it's going to show up by December or January. The government shutdown, you've got this 1 year deal hammered out now. Well, that was going to give us this massive rally, and stock market's down today. It's already priced in. We're not done with negotiations by any means. They got a temporary deal. They're going to be doing more negotiations going forward. Got this 1 year deal. Still have tariffs on China, by the way. Still have a banking crisis looming. Regional banks are in serious pain right now. People are ignoring it. You're going to hear more headlines about that. You're going to hear more talk about the regional banks. It's really quiet right now. It's the calm before the storm, but you're going to hear it. And just some things to be aware of and paying attention to. And again, I think when the government does finally reopen, I think you're going to get a jobs report, and I think it's going to be a negative number. We've already seen deterioration in the labor market. Somebody asked me today, well, we can't have a recession. We have good GDP. The GDP market's top on good news. We have a low unemployment rate, even though we're starting to see deterioration in the labor market. Unemployment rate is still relatively low. Powell said that yesterday. We've had a good GDP number, but then markets top out, start seeing this stuff go bad. Back in 2007, we had relatively good economic data. Negative GDP didn't show up until deeper into the recession later in 2008, surrounding the financial crisis. The recession started in December of 2007. They told me again today, oh, we can't have a recession, or we're not going to go down. We don't have a top. We can't have a recession because we don't have negative GDP, and that's just simply not true. Now, I told you last Friday, either we're going to get a top on Friday or you're going to get it this week with the Fed. And I told you to be watching for this divergence to complete. And I think it's done on the RSI. And again, you're likely headed into January, going back to the April low at 48.35. A 30% decline. I expect that you're going to drop 26 to 30%. You may be higher than this level. Sometimes you get a slanted neckline with head and shoulder patterns. Head and shoulder patterns are very common on the S&P 500. They're very common, and inverse head and shoulders as well. Very common on Bitcoin. Bitcoin and the S&P are doing the exact same thing. NASDAQ and Nvidia are forming broadening formations where S&P is forming this head and shoulders. I think you're going to get a dramatic drop. Something's going to happen. The VIX is warning us something's about to happen. People are complacent. People are, and even now, look at what's going on with Bitcoin. Bitcoin, when I called the day of the top for Bitcoin and I warned, it slammed right into major resistance. And it didn't even overthrow it. We had the NASDAQ overthrow it. We had the big liquidation move in crypto. It had the largest liquidation move in history. You're going to see something like that again with crypto, and you're going to see something like that. Bitcoin's in crash wave 3 right now, starting wave 1 right now for the S&P 500. Bitcoin dropped 18%, and people, it's bottomed, it's over. The people that were saying that it was never going to go down were blindsided by the peak. Rallied up again, and now we finished wave 2. We're now getting wave 3, getting angrier and angrier because we didn't think it was possible. Again, you're going to give this back real quick. You're going to give, again, much of it back very, very quickly. I think by December or on into January, more likely January, I think over the next 10 to 14 weeks, you're going to see, and if it's faster, it's 10, but it could go as long as 14, the 2007 top. I think you're going to see 26 to 30% crash down here. And then I think the Fed will cut and you'll get this massive rally back up towards the 6,200 area. This was 61.47 right here at the February peak. And that's what I think. I think you're forming this massive head and shoulders. I think Bitcoin's doing the same thing. I think we've got a top, and I think this is what's now going to happen. Head and shoulders pattern measures back down, going back down to test the pandemic low. Pretty amazing there. And again, we're probably going to get a very big ABC move correction. And again, you could have 5-3-5 pattern down, 5 legs down, and then 3 back up, and then another 5, or 3-3-5 pattern could play out different ways. We've likely completed the cycle top, completing the super cycle and the grand super cycle, if we begin to validate reversal off the weekly trend lines. And I told you that, again, just like in 2007, you had the first cut here, you went to a new high, you topped a few days later. We've gone a little bit longer than that, but we're topping a couple weeks after Bitcoin here. Bitcoin peaked on October 6th, about 3.5 weeks ago, and then the market peaked on Wednesday, 3.5 weeks later. It happened in 2021. Though the NASDAQ peaked, the S&P went later on to make a new high. I doubt that's going to happen because of the tech exposure on NASDAQ now. It behaves like NASDAQ Junior. But again, the October meeting, we had the sell-off with that. That's what we're getting right now. Told you I thought the Fed meeting would be associated with the top in all likelihood just before the Fed or with the Fed. Here it was with the Fed. And then we got another cut in December, and that produced a bigger sell-off. And this is where the Fed panicked in January. So I think it's going to play out this way. Again, history always isn't exact, but it does rhyme. Again, I think you have the topping process here with the rate cuts. Now we're having the Fed in quantitative tightening December 1st. This is, the fact that the Fed is starting to cut and ending quantitative tightening, that should raise all kinds of bells and whistles in your head there. And huge red flag. When the Fed begins a rate cutting campaign, historically, the stock market peaks and tanks, and you get a recession that immediately follows. A good majority of people weren't around with the bursting of the tech bubble or with the financial crisis. The Fed blow the bubble so big, so they don't know about it, and others that were with us back then are no longer with us. That's why history so often repeats itself, or as I said, at least rhymes. I think we're doing the same thing. This is why I was telling you we're going to get a sell-off with the Fed. And this is the 2007 top, by the way. I told you to be watching for a stochastic rollover today. We got the bullish cross on the stochastic yesterday for the VIX. We got the bearish cross today on the S&P 500. Told you that was coming. Told you to be watching for the close below the upper Bollinger Band. We got that yesterday. Now it's being confirmed with our hanging man candlestick. Look at the hanging man. It's being confirmed. These gaps up for 4 days. And then we filled Wednesday's gap with the hanging man candlestick. Powell started the sell-off, giving us the hanging man. Now it's being confirmed. You're going to likely see a follow-through. Now, again, maybe we fill this gap. Great Scott, did you hear what I just said? Maybe we fill that gap, but maybe we don't. Again, if we rally on the earnings, you can come back, you can fill it, and you can either begin to turn on Friday, try to get the confirmation follow-through bar, or the follow-through to the confirmation bar, I should say, or try to fill the gap and then sell off early on next week and resume the decline. But again, as I've said, I think you've got a top here with this hanging man going right into major resistance. Remember, I told you it could be here, the candle of indecision with our spinning top candlestick. I warned you we could peak with the Fed, and we ended up going a little higher with the Fed, and you got this hanging man. I think that we've topped. I'm telling you straight out, I think we've topped. Be watching that gap. We now have confirmation here, so we'll be watching. If we do rally back up, do we establish a lower high filling the gap? Gaps right here are all going to get filled, and you're going to come back down. And again, end up losing the rally overnight. Something happens overnight, you could just continue to move down here. Eventually, this is where we're going, is to 65.50 for the head and shoulders. MACD hasn't rolled over. As I told you, by the time it rolls over, you're going to have a significant drop. Instagram is ticking down. We'll be watching to see if we get a rollover Friday or on into next week somewhere. It'll be interesting to see if we fill that gap or not with the Amazon and Apple earnings. Does the rally fizzle out overnight? Something happens, or Trump does a tweet that rattles the market, or whatever the case may be. Watching that gap going into tomorrow. But I think you've got a top, as I've said. Told you yesterday, I believe we topped. I told you into this week, be watching for a top this week. Why? Because we're at major resistance in the weekly time frame. In a similar situation here on the NASDAQ, again, we had a doji-looking candlestick. I told you might be a hanging man, but it's a sloppy hanging man. It looks more like either a shaven head or a doji. I'm calling it a doji. That's what it looks like to me, and we confirmed that by closing below it today. S&P closed below the upper Bollinger Band yesterday. We closed below it today on the NASDAQ. And we got the stochastic also rolling over on the daily chart here. Again, you've got a head and shoulders. Again, maybe we try to go fill those gaps. Maybe we don't. Maybe we get more of a feeble rally and then go down. But again, you're likely headed back to this level from the low on October 10th. Back towards our 50 period, probably dropping under it, hitting horizontal support here. So the NASDAQ doing the same thing the S&P is doing. I think MACD has not rolled over yet. You have a massive divergence going back. We did move above this high right here, but you have still larger divergence from previous peaks. And again, we'll be watching the confirmation. Do we now get a follow through? We got a confirmation bar to the doji. Do we now get a follow through? I'll be watching the weekly close. This is the weekly chart of the S&P 500. Right now, you're getting a topping tail. You have a black candlestick, at least so far. I told you at the beginning of the week, watch to see how we close. What kind of candlestick do we get? Because you're slamming up into major resistance. We've got a divergence as we're turning down with this candle here. We've got a divergence going on with the RSI. The same divergence is going on here with the stochastic and the histogram that's going to eventually cause the MACD to roll over, and you're going to come down sharply. And again, as I keep saying, you're going to drop down. You're going to end up dropping down towards the April low. And is what's going to happen is you're either going to move down towards it, above it, 26, 27%, or you're going to move down to horizontal support and hit our 200-week moving average, which is right at that same area right now. Do you see this? Here we are right here. The 200 is just above that, or if we exclude the shadow and get something, like I said, 26, 27%, or maybe a slanted kind of a neckline with a higher low, you could come down in here to 5,000 or 5,100 or something like that and not move down to 4,800 here. You're likely moving down to the 200. You'll probably get a bounce. That's by January. We'll probably be down here. December or January, the Fed will do an emergency cut. The market will rally back up, and it'll likely rally back up to get a lower high for a head and shoulders back up towards 61 or 6,200. So it's going to come down, and then it's going to pop back up. People that are telling us it's not going to happen are going to proclaim it's over down here, just like over here. People never saw it coming, and that's what's likely going to happen. True for the NASDAQ weekly chart. Again, you gapped higher, you got a possible topping tail. We'll see how these charts look by the end of the week. If we try to rally, do we rally and then sell off further? Or do we close strong on Friday? Or does a rally fizzle out overnight with futures or tomorrow morning and we end up going down for the session without filling the gap on the S&P? Let's bring this up close. This is the S&P weekly chart. And look at the topping tail, the shooting star candlestick that's developing. I told you if we topped this week with the Fed, watch for a reversal bar into resistance. NASDAQ getting, again, similar candlestick at the moment, a gravestone doji. We could rally back up and then close at the levels where we're at right now. Still have these reversal bars in the weekly time frame. Dow weekly. Also got back-to-back reversal bars, a shooting star and a hanging man, and now again it's getting a lower high diverging with the S&P, and you're getting a sell-off here, down nearly 2% for the week. Nvidia could have a topping tail by the end of the week. Again, Nvidia is overthrowing major resistance. I'll show you the chart this weekend. Do we close below it? I showed you it earlier in the week. I'll be watching. If we sell off with Nvidia, do we get a massive topping tail and a shooting star kind of a candlestick by the end of the week? Signs today, some of my signals, like right here, warning of a potential pullback or reversal. So far, the signals on the way up have only produced pullbacks. Got a major bottoming signal down here, counter trends over here. It's telling us, hey, either you're going to get a pullback or a reversal, and I think it's likely going to be a reversal. These other ones were all pullbacks or smaller pullbacks. The blow-off top is done. I told you on Tuesday, the S&P got a 913.9. A 913.9 is a reversal pattern. And again, that was Tuesday. And I told you to be watching for a top either with that bar or with the Fed day. And we got the hanging man with the Fed. And now it's being confirmed. So again, and these other 9 counts have led to sideways moves or pullbacks. This is likely going to lead to a reversal. You're likely headed back to the 50 and a horizontal support at 65.50. Those 9 counts in the weekly time frame, we've slightly overthrown them, and now you're turning off a major resistance. This massive negative divergence in the weekly time frame with the exposure index, the NAAI exposure index, hitting major resistance. Talked about the S&P monthly chart slamming up into the 100-year channel. Again, it's slightly overthrowing it. Does it close below it by the end of the month? Or even we can go to the quarterly chart. Because it's such a long period of time, it would be 3-month bars, watching to see how this closes. We've had an overthrow move to it, and we're turning off of it. I'll be watching to see for the month, do we end up closing down off of this level? And even if we don't, you can still turn off of it with quarterly bars. You're watching indicators for any signs of red going forward by the end of this week or on into next week. S&P daily. Have that channel in the monthly time frame. We also have the channel here from the 2020 low in the weekly time frame. I told you we're slamming up into it. Now, again, previously on the October 9th peak, I included this shadow. I've now excluded it. And you never know with channels, longer term, whether you include the shadows or exclude them. Better seen after it already formed. So you got to play with it when you're looking for it to act as resistance. But I'm connecting the 2020 low, excluding the shadow here, and then connecting that to this low over here, excluding the shadow. Including the shadow from the 2022 high, and we're slamming right into that here at 2025, slightly overthrowing our trend line from the 2023 low there in blue, turning off of the red trend line, getting a topping tail at the moment as you've seen in this video. S&P weekly. Again, this is excluding the shadow low here and connecting this to the 2020 low, and you're slamming right into this thing. Previously, I included that shadow, and that was the high over here on the 9th of October. So again, probably peaking a couple weeks after Bitcoin, which is what happened in 2021. Bitcoin wasn't back around the bursting of the tech bubble and the financial crisis. It didn't exist back then. Bitcoin's probably going to drop 80 or 90% bear market, but you're getting a topping tail off of this trend line. That's why I'm trying to short those divergences on Tuesday and Wednesday. They're on the 15 and 5-minute chart. I'm trying to play this resistance right here. Again, we're likely headed back to this low in April, or this trend line if we try to get a higher low here, or maybe breach it and get a higher low just with a bottoming tail or something. So again, you're likely headed down the trend line or towards the low. Likely topping. And if we get a topping tail, then I'll be looking for confirmation next week. The selling to resume. Be watching. Can we get that gap fill or not with Apple and Amazon earnings? Does that rally just fizzle out overnight? Dow weekly chart turning off of the trend line here parallel to the lower boundary, forming a Dow theory reversal signal. Again, what you have at tops, and you've got the larger diversions going back over here, back a couple months so you can see it here. Again, we peaked in 2021 on the transports. Okay, we've never made new highs. The Dow has. They're diverging again with this channel. So again, the Dow is likely peaking at this channel. The S&P is like, and this is our channel from the 2022 low. Got another channel on the Dow that goes further back into 2020 as well. Slightly overthrowing that, but we're reversing. We're getting a topping tail. It's got this broadening formation. We've had an overthrow move here, slammed up into the trend line in the weekly time frame and overthrown that, just like Nvidia. But they're both turning down off of it. This is a reversal pattern. We're likely going to see it sell off, go back up, get a partial rise so the S&P can form a head and shoulders pattern. You've got a broadening formation on Nvidia. You've got a broadening formation on the NASDAQ. You got that topping tail today. It's being confirmed with the spinning top candlestick. Again, we'll be watching. Do we end up coming back and giving back all of the gains eventually here with these gaps higher, which help NASDAQ? Here's my channel with the NASDAQ with our log scaling. Again, I've taken a trend line from 2018 low to the 2020 low to the 2021 high, and it's pointing up to right where we're at. We've had a slight overthrow move, turning off of it with the topping tail. You could see the broadening formation going into, as we rally into that upper channel line, the broadening formation we saw on the daily chart. Again, I told you to be watching for reversal bars this week. That could be topping tails, and again, futures is trying to rally back up. Do we end up giving back that rally after filling the gap and end up with these topping tails? We overthrew the trend line, but we're below it at this moment. Go back up to it if we rally with futures with the Amazon and Apple earnings. Does the rally, do we fill the gaps and then fizzle out and turn right back down? I think you've got a top here. I think you're coming back to test this low, coming back to the longer 200-week moving averages. Bring up the 200-week on the weekly chart here. That's just above this area. I think you're coming back to these levels or just beyond them to test the April 7th lows. Eventually, the NASDAQ will take out this trend line and come back and test the lows from 2020 and 2018. And I think in that area is where the bear market come to a conclusion, just above these areas or just beyond these areas of support. NASDAQ weekly chart.